because it's 18 minutes to Paddington. Easy! With friendly staff on hand to take any deliveries. Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
All right, welcome back. The housing sector will be in focus later on this morning as we get the release of the Case-Shiller Home Price Index, along with pending home sales and housing vacancy figures. That data comes amid recent concerns about the strength of the sector because nobody's apparently building new homes anymore, but they are remodeling. Joining us now is Bill Darcy. He is CEO at the National Kitchen and Bath Association. Love having you on, Bill, because this is the real stuff that powers the economy. Somebody deciding to spend 8, 10, 15, 20 grand and say, let's redo that old bathroom. They end up spending, they end up spending more than they initially planned to do. How is that market doing right now? Any sign of a slowdown?
It's doing very well. Our partnership with John Burns Real Estate Consulting and our Kitchen and Bath Market Index allows us to keep a close watch on this. They predict 2.5% growth in remodeling spend in 2019. And remember, that's up from a record 2018. So it is still expanding. It's at a slower pace.
This is the staggering stat, I think, perhaps of the day. According to John Burns, new home construction is down 54% since 2005. And yet, there's 85 to 88 million millennials who are getting into home buying age. Does that mean that everyone's just going to stay put, add a room to their home?
It's weak affordability right now. 60% increase in home prices since 2011 and only 26% increase in wages. You combine that with some student loan debt that's building. And I think housing is not where we want it to be, but it's not bad.
Now, how are people paying for the work that they're doing? Are they using their homes as ATM machines again?
Primarily, remodeling is driven by boomer cash. So even with
not taking an equity line, jacking up the value of your home, getting underwater in your mortgage. This is cash.
Biggest percentage is boomer cash. Yes.
So do you see this trend continuing? Because the boomers, and with all due respect to all of our boomer audience, they're getting older.
It is, but houses are getting older too. So 65% of the housing stock in the U.S. almost 40 years old.
65% of homes are more than 40 years old?
Nearly 40 years old.
Nearly 40 years old.
Nearly 40, yeah. So you combine that with the fact that people are staying in their homes longer. So whether it's for aesthetics or functional reasons, people are living in different ages, are living in the home. You have to accommodate your spaces. And where are you spending the money? Kitchen and bath.
So what are your members then concerned about? What do they call him and say, Bill, we need to work on what?
They're cautiously optimistic about the continued growth in remodeling. People are still spending the money in remodeling. Housing slowdown has dominated the media,
Sure.
Obviously, is what you're talking about here. But the remodeling side is because people are staying in their homes longer. Where are they investing? Our members tell us.
So from your members' perspective, you do not see an imminent or near-term recession in the U.S. economy?
Not near-term.
Because I would imagine you guys are a pretty good leading indicator.
We are. I mean, the KBMI has really given us that.
People who are afraid of the economy do not spend $20,000 on a new bathroom.
Right. I mean, the Michigan Consumer Index just came out and says it's continually positive. So I think we hear a lot of news about what's happening. A lot of it is driven on housing, whether it's apartments or other things in commercial. But in residential, kitchen and bath, we see continued growth. Again, it's growing a little less rapidly as we thought it was happening earlier in the year, but it's still growing.
Why are there 800 types of faucets?
Giving you the options, Brian, so you can pick the best one.
Yeah, but you don't have to. I'm redoing something recently. I'm like, why?
That's why you need to work with an NKBA member so they can help guide you.
Guide us. Do we need 800 faucets?
Hire an NKBA member, and they will help you find the solution.
Environmental low-flow faucets are awful. It's like you're trying to wash your hands like drip, drip, drip. Anyway, Bill Darcy, thank you very much.
Brian, thank you very much for having me. Appreciate it.
Let's find out what else you're going to be talking today besides my kitchen peeves. Time for this morning's top trending stories. Rahel Solomon is right there. Rahel, what are we
There are too many faucets. Who knew?
No, it's 800 types of faucets. Why?
Good to know. Here's a question that actors are asking. So Netflix wants its users to binge shows even faster, and actors want to know why. The tech giant is testing a new feature on its Android app. It lets subscribers speed up playback on their favorite shows. Users can stream content up to 1.5 times the original speed or slow down the speed. While fans may appreciate the feature, at least some fans, content creators, not so much. Aaron Paul, star of the Breaking Bad movie, sent the streaming giant a fiery tweet, reading in part, "There is no way Netflix will move forward with this. That would mean they are completely taking control of everyone else's art and destroying it. So here's the thing. I'm actually watching a show, binging a show on Netflix right now.
Which one?
Top Boy, based in London. And sometimes the accent is really thick. I wouldn't mind slowing down the playback. Speeding up, never.
I wonder how much of this is just designed to get people to just watch, like it just runs. You know what I mean? And so you get the viewer numbers. It's just
Well,
plowing
it's a
through.
terrible experience.
Like listen to an
Right.
audiobook on 1.5 times speed. But the author kind of talks like this.
You know what? I listened to a podcast like that last night. Totally missed the meaning. I need slow speed.
Let's talk about Facebook.
Facebook will begin using your data to remind you to stay healthy. The company will take a user's age and sex and then create a personalized list of suggested health screenings through a new preventive health tool. So the tool will range from basic reminders about the flu vaccine and annual physicals to more serious reminders about cancer screenings, colonoscopies, and heart checkups. This is Facebook's second foray into health-related tools after launching a blood drive promotion tool in 2017.
Fair enough. The health tool, personalized reminders.
Yeah, also they say that they're not going to send you ads based on what your activity is. You can't post accidentally what your activity is, so there are no privacy issues there. And apparently only a very, very small group of people will see the data. But of course, it's data and privacy issues.
They don't want to use your data.
Abound.
They don't want to use your data.
Not at all. Food drones may become a reality as early as next year. Uber released photos of its Uber Eats food drone. The air delivery vehicle utilizes innovative rotating wings with 6 rotors for increased speed and flight efficiency. Uber designed the drone to deliver orders in 8 minutes, including loading and unloading. The drone can hold roughly 2 meals and has already passed critical design reviews. It is expected to launch in San Diego in 2020.
Okay, I mean, is it worth it? Do you need the burger? Do you need the burger? I guess with the cannabis boom, you need the drone.
Because if you're partaking,
I'm told
then
you
you
might
want
get
your
hungry
burger right away.
And you're obviously not going anywhere.
I wouldn't know.
You might be a little bit hungry, right? I'm thinking Shaggy from Scooby-Doo. Not saying anything.
Yeah.
But let's all be clear why Shaggy was always hungry and screamed.
Oh, no.
And you need that drone.
You're ruining Scooby-Doo.
No, are you kidding? It's the best show ever.
Come on.
Oh, no. Rahel, thank you very much.
Sure.
All right, on deck, several major automakers throw their support behind the Trump administration in the fight over fuel efficiency standards. Details on what companies are wading into that battle. Plus, Boeing CEO, he is going to face angry lawmakers today involving 2 deadly crashes of the 737 MAX jet. Phil LeBeau here to preview what will likely be a very, very contentious hearing.
As a principal, I can tell you this.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
Can I have chemo at home?
It's only suitable
I've heard
for a couple of types of
treatment.
cancer.
Type of treatment. So literally just
The doctor will decide.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
There's It's a Tuesday Morning happy. Listening to a banger happy. There's no traffic on the M1 happy. The in-laws aren't coming round tomorrow happy. There's only 57 days until Christmas happy. It's first coffee of the day happy. Getting your car fixed before work happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want reality TV, I can fill that island-shaped hole. Horrors, no problem. It's not real, it's not real, it's not real. Or how about sports? These games are unmissable. Get in. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus. Month passes auto renew. Terms apply.
All right, time now for your executive recap. All the headlines you need in 60 seconds. Here we go. BP says third quarter profit fell more than 40% in part due to weaker oil prices. Company's $2.3 billion, which topped analyst estimates, was down from $3.8 billion a year ago. Meantime, Saudi Aramco gearing up to announce the start of its hotly anticipated IPO in the coming days. According to reports from state TV, it is aiming to price that offering on December 4th and begin trading in Riyadh on December 11th. Speaking of IPOs, the company behind TikTok denying it is looking to go public. Speaking with TechCrunch, ByteDance disputed a Financial Times report. It is weighing an offering in Hong Kong as early as the first quarter of next year. And several major automakers are siding with the Trump administration in its efforts to keep states from setting their own fuel efficiency standards. In a filing with the U.S. Appeals Court yesterday, GM, Toyota, Hyundai, and Fiat Chrysler said they supported the White House's fight with California to stop individual emissions rules by states. Meantime, the CEO of Boeing is set to face critical questioning over the company's 737 MAX jet in the wake of two deadly crashes. When he appears before Congress later on this morning, Dennis Muilenburg expected to admit his company made mistakes involving the jets. CNBC's Phil Blow joining us now from D.C. with a preview of today's hearing. Phil, it's going to be a hot one.
It will be, and the questioning for Dennis Muilenburg will be intense. He will admit that Boeing has made mistakes and did make mistakes in the development and the manufacturing of the 737 MAX. But the questioning really will come down to a few key areas, and this will tell us whether or not we see this become more than just political theater over the next day and a half here in Washington, D.C. Let's start first off with the question of how far up the executive ranks did the pressure to rush development of the 737 MAX come? We talked with Representative Peter DeFazio yesterday. He said, look, I think this might go all the way to the top of the company, including Dennis Muilenburg. Did Boeing mislead regulators with the FAA? Remember, just a couple of weeks ago, there were text messages, instant messages that came out from a former Boeing technical pilot who suggested that he may have misled regulators. Boeing says, look, that was misunderstood, those instant messages. That will be a topic of conversation today. And finally, does Dennis Muilenburg show contrition? It's not enough simply to say, we made mistakes. The tenor and tone of his testimony today will matter. He is going to say that they are learning from this experience, that they have changed. In fact, in his prepared testimony, one of the comments that he's going to be saying today, and this will come at the very beginning, I can assure you that we have learned from this and will continue learning. We have changed from this and will continue changing. Well, there you have it. One of the quotes we will hear from Dennis Muilenburg today when he's on Capitol Hill. By the way, Brian, this is the 1-year anniversary of the Lion Air 737 MAX crash.
And it certainly is, I guess, interesting timing there. But Phil, this is a bipartisan thing, too. This is not going to be one of these, these hearings where one party is all friendly with questions, the other one attacks. They're all going on the attack, as maybe they should.
Yeah, and they'll be intense. They will really go after Dennis Muilenburg. And his tenor and tone will be critical because I think a lot of people, you're going to hear people, Brian, today, I have no doubt you will hear people say, why are you still running this company? Shouldn't you have been fired by now? And I'll be interested to see what Dennis Muilenburg's reaction is to that question.
And we all will. I know it's going to be a big day. Long day on Capitol Hill. Phil, we appreciate it. Thanks very much.
Bet.
All right, let's turn back now to the markets. You might have heard this. The S&P 500 at its first new record high since July. But what do you do now? Yesterday was so yesterday. Joining us is Dave Mozzie, is head of product at Direction. So, Dave, what are we've talked what are your clients doing? How are they betting? How are they investing into this market right now?
Well, it's interesting. This has been the year for the S&P 500 that people coming into it were not expecting much. But the market's like the Patriots, right? No one's expecting them to be awful. Although I might have
maybe not this good,
but not this good,
not 7-0,
right? So looking forward from an expectation standpoint is actually the momentum's behind the markets, and we actually think it can continue to move forward from here. And we're beginning to see the investor community and the trading community follow suit.
How so? What are they doing?
Well, what's interesting, of course, we know that a lot of it's been the S&P 500, but more recently we've seen people actually move back into tech. Market leaders this year are an interesting mix. If I look at the sector perspective, it's utilities, real estate, and then tech, right? So you get two very domestically oriented areas of the market, utilities and real estate. And those are historically defensive, and you continue to have tech. Look at Microsoft's earnings, most recently, continued to show growth of the cloud platform, and that's kind of got investors to kind of get their toes back into that area of the market.
And so they're betting on big tech, they're betting on names like a Microsoft. And how are they doing that? Are they buying levered ETFs? Are people taking bigger risks in the market, Dave?
We're not actually seeing a significant amount of risk being taken outside of the ordinary with that particular area. So we have two leverage ETFs, Tech L and Tech S, that allow investors to amplify their exposures to that particular area of the market. But we're not seeing volumes in that area really pick up. We are beginning to see volumes in the semiconductor names pick up as investors look to take more concentrated bets in that space. But a lot of those names, it's been a mixed bag from some of the earnings coming out of that particular space, with more reporting to come.
What are people getting out of?
Well, we saw a significant amount of flows move into our leveraged gold miner products. As we know, gold was really thought of as a defensive play over the summer. Well, that's begun to kind of come off the table as people begin to maybe dip their toes back more into risk-taking areas of the market on the equity side looking ahead. However, this earnings season, as you know, it's been okay, as investors have, as companies have beat expectations, but they're not beating them as much as they have over the previous 2 or 3 years. So I think that's why we're not seeing kind of traders dive back in head first. But they are not ignoring the fact that markets continue to power ahead.
One thing we've talked about in this show a lot lately is liquidity. Volume overall for stocks has been down. Do we need to worry about underlying liquidity for ETFs, Dave?
Well, we don't actually have to worry about underlying liquidity for ETFs, especially in the stock market. ETFs actually, in my opinion, add liquidity to the market because now investors have the ability to not have to transact in the individual securities. We don't have to go out and trade all those particular securities when people are actually managing ETFs. You can actually have that additional.
So a lot of your products just mirror this. They don't need to buy and sell the actual shares. They just mirror the moves.
Yeah, exactly. So you only actually have to go buy and sell those individual securities when you have inflows or outflows. So in any given day, there's significant trading volume happening at the ETF level, but not at the individual security level. It's one of the real benefits.
So it's happening on a separate level above the equity market. That may be one reason why equity volumes have not been good.
Well, that is a good point. So we have seen, in times of uncertainty, money moves into ETFs, money moves into futures and other kind of broad-based areas. They're not taking as much single stock risk. Now, people have a bit of concern about that. But I think it's more reflective, frankly, of the macroeconomic environment we've been in, where there's been a little bit more clarity on things like the trade war, some of the big picture issues, but it's not an all clear signal by any means.
Dave Mazza, Direction Dave, a pleasure to have you on. As always, thanks very much. Betting on big tech. Time for your morning RBI. And baseball, once again, random but interesting. And if you've been watching the World Series and have a feeling like that Baby Shark song is in your head, well, you're not wrong. There is a reason. Here's the backstory. Nationals outfielder Gerardo Parra was in a slump. He was trying all kinds of music as he walked up to the plate, rock, hip-hop, whatever. Nothing worked. His young son loved the Baby Shark song, so he said, whatever, and had that played as he walked up to bat. He went 2 for 4 that day, and now that's his thing. And it is the thing that is causing some big bucks to be thrown around. According to Major League Baseball, nearly 5,000 Baby Shark products have been sold recently worth more than $100,000. Baby Shark, big money. The Nationals need some luck. They've lost 3 in a row. The Astros can close it out tonight in Houston. Thanks for watching Worldwide Exchange. We'll see you tomorrow. Squawk Box begins right now.
Good morning. The earnings parade continues with the S&P 500 at a new record high. Among today's highlights, results from Merck, Pfizer, and General Motors. Beyond Meat shares are plummeting despite beating on the earnings report. We're going to tell you what's weighing on that stock and bring you a first on CNBC interview with Beyond Meat CEO. Plus a shakeup in a galaxy far, far away. The creators of Game of Thrones walking away from the next Star Wars trilogy for Netflix. It's Tuesday, October 29th, 2019, and Squawk Box begins right now.
This is Squawk Box.
Good morning, everybody. Welcome to Squawk Box here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Let's take a look at the U.S. equity futures at this hour. You'll see that the Dow, the NASDAQ, and the S&P all indicated a little bit weaker today. Dow indicated down by about 46, S&P off by 6, the NASDAQ down by 24. Yesterday, the S&P closed at a record high for the first time since July 26. You saw the big run that it's seen. NASDAQ took a shot at a new record, didn't quite get there. NASDAQ's only about 0.2% off of its record high. Dow's only about 1.1% off of its record high. And of course, we've got the Fed meeting tomorrow, so lots of market speculation around that. We'll see what happens as we get a little closer to the opening bell. But again, red arrows this morning. Overnight in Asia, the Nikkei up by about 0.5 percentage point. Hang Seng was down by 0.4 percentage point, and then the Shanghai Composite off by about 0.9%. And then in Europe, where there is some active trading that's taking place right now, you will see that at this hour, red arrows across the board there too. Biggest decliner of the three major averages is the FTSE 100. Finally, take a look at what's been happening in the Treasury market. You'll see that the 10-year right now looks like it is yielding 1.824%. So those yields still hanging in, a little bit lower than where we were yesterday at this point, but again, well above 1.8%.
Let's talk about PG&E, I should say, saying that its power lines may have started two wildfires over the weekend in San Francisco's Bay Area. Blackouts were in place to prevent downed lines from starting fires during windy weather, but the fires began in a section of town where the utility opted to keep the lights on. The sites were not designated as high fire risk. Another round of blackouts is expected to begin today as more strong winds move onshore.
All right, the U.S. is considering extending some tariff exclusions on some Chinese goods as the two sides work towards a trade agreement. The exemptions on nearly 1,000 products represents about $34 billion in goods are set to expire in December. In September, China said it plans to exclude American farm goods from tariffs pending the trade talks.
Boeing CEO Dennis Muilenburg is set to testify before the Senate today. A draft of his prepared remarks said that the company, in their words, made mistakes and got some things wrong. We own that, and we are fixing them. Muilenburg's going to be facing some tough questions over reports that Boeing employees felt pressured by management during the 737 MAX certification process. That hearing begins at 10 a.m. Eastern Time. We'll be watching it closely, but before that, we will talk to two senators who will be questioning Muilenburg, Roger Wicker and Ted Cruz, both of them coming up this morning.
Let's talk shares of Google. Google parent Alphabet are lower this morning. Earnings per share of $10.12 came in well below the $12.42 that analysts had been expecting. The company did report record ad sales, but costs continue to pile up, rising faster than revenues as it invests in new businesses such as consumer electronics and the cloud. Ruth Porat, by the way, also asked about whether they're buying Fitbit. I don't know if you saw the reports about that.
Fitbit was up sharply.
Up sharply as well.
It's like a $5 stock.
Of course, there's still questions about the costs, but I think the advertising issue is the biggie.
Also, check out shares of Beyond Meat. They were getting slammed in the pre-market activity. The company came out with earnings. It reported its first profit as a publicly traded company, raised its outlook for the year. Numbers beat expectations, but Beyond Meat is facing increasing competition from rivals like Impossible Burger, even as it signs new deals with big chains including Subway and McDonald's. The shares have been under pressure in recent weeks since topping out near $240. Check it out right now. It's down by about $9.50 to $95.85. But remember, if you're looking at a longer-term run of where this stock has come, this has been a pretty phenomenal story from the IPO. CEO Ethan Brown's going to be joining us to talk more about the quarter at 8 a.m. Eastern Time. And by the way, today is the day that the lockup expires for any of those employees who wanted to sell some of the shares that they got. Probably part of the reason you're seeing that pressure
on the stock this morning.
As we see so often. All right, coming up, we're going to get you ready for another busy morning on Wall Street as the S&P starts in a place where it's never been before. Never been before.
To infinity and beyond.
To infinity. We can only hope. We got reports from Pfizer, Merck, General Motors, plus the start of a Fed meeting going for us. We're going to talk strategy with the S&P, as we said, closing yesterday at a record high. As we head to break, here's a look at the biggest pre-market winners and losers, specifically in the Dow Jones. We'll be right back.
The CNBC program is sponsored by Capgemini.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto renews unless cancelled. Terms apply.
Hurry to TradePoint. The 3 for 2 on all paint offer ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. From Dulux Trade to Leyden Trade. Don't miss 3 for 2 on all paint at TradePoint. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Do you remember picking out your engagement ring in the jeweller's window? Or choosing your first home? Or deciding the names of your children? When it comes to the important choices in life, you've always taken the greatest care. So shouldn't the same go for which firm of funeral directors you use? After all, that's an important choice too. At Dignity Funeral Directors, we're like you. We also take the greatest care. Our name is your assurance we'll be there by your side every step of the way. Just look for the sign that says Dignity. It's on all our branches and on the Dignity website. Dignity Funeral Directors. Taking the greatest care.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
The Standard & Poor's 500 average closing at a record level ahead of the Fed's two-day policy meeting, which is happening today. Markets are expecting another rate cut, but could the Fed disappoint? Joining us for that is R.J. Gallo, Senior Portfolio Manager and Head of Municipal Bond Investment Group at Federated. And here on set is Ed Campbell, Senior Portfolio Manager at QMA. And I was looking over a couple of your notes, Ed. You're bullish now. And there might be a melt up at the end of the year, or the latest. But we just hit a new high yesterday, so thanks for that. But so you think the market is actually might be in rally mode? We're at a new high, though.
Right, and I think we've tried to break decisively above above 3,000. Three failed occasions this year, and now we're pushing through. So I think the stars may be aligning for a year-end rally here. Right. So the geopolitical risks have been the dark clouds on the horizon, and a hard Brexit is off the table for the rest of the calendar year, and the trade situation, at least the conversation, seems to be moving in the right direction. So we've gotten through the difficult months of September and October without any major blowups, and now we're moving into a seasonally strong period.
When you say a year-end rally, we haven't seen it yet. We're through September and October, but you're talking about in November, December, a decisive move above 3,000 that could add 5-10% to the average? 5, 7, 10%, possibly, yeah. Above where we are right now. Yeah. That is a definitive, and it would certainly break the trading range where some people don't date it back 18 months, but when's the first time we got here? I mean, it was a while ago. I feel like we've been kind of flat.
I mean, if you go back to January of 2018, we had that big run up after the tax cuts, and we've really only had 3% annualized price appreciation since there. So it feels like it's been a fantastic year with the stock market up 20%, but that's really just a recovery from the big dive that we took in the fourth quarter.
I've seen people making that point that that the market's already way ahead of itself based on flat earnings. And it really, if the market anticipates a flat earnings year, in 2018 it would have anticipated a flat year in 2019 and tread water from January straight through to where we are right now. But valuations are maybe a little bit higher, but rates have come down, and we kind of spring-loaded everything, have we not? And we may be seeing some other things bottoming as well, with manufacturing, other sentiment, earnings growth may be bottoming. I mean, we may have spent enough time churning around.
Right. So we're seeing, the big thing has been the downturn in global manufacturing. I think we're starting to see some tentative signs that maybe that is bottoming. We do have a lot of stimulus in the pipeline with 48 central banks cutting rates this year. The Fed getting ready to deliver number 3. So, I'm not wildly bullish. I still think the economy has a lot of issues and a lot of problems. But I think investors can probably put away those concerns between now and year end, and we could have a pretty decent up move.
Okay, for the fixed income side, RJ, munis you got to think about a lot. You got to think about principal risk, and then you also got to think, if we're facing a slowdown, you have to actually worry about credit risk, I guess, with munis. Do you feel good on both counts, or you're a little bit, sticking your toe in the water here?
Well, in general, it's been a heck of a year for fixed income. The Muni Index from S&P or Barclays up each about 6.5%. Yields have come down, yet the economy continues to expand. That's a nice mix for municipal borrowers. They're able to refinance debt, in many cases even issuing taxable bonds to refinance out higher cost, old tax-exempt debt. The credit trajectory in munis generally has been benefited by the economy's long-term expansion, which we've been in now for a very, very long time. The equity market's been on a huge bull run. That helps the pension situation. We still have some really troublesome situations there, but it's not universal. Across the states, it varies widely. So the muni credit situation is very strong. The rates environment has been great for investors, and total returns are very beneficial as well.
All right. So what can we expect from the Fed? Any surprises?
I don't think it'll be a surprising meeting. I guess the big question is, how does the Fed couch what they have done cumulatively now that we're going to get another ease? That'll be 3 eases in what may in fact be the mid-cycle adjustment. Recall that Chairman Powell was sort of panned by many in the market for even suggesting a mid-cycle adjustment was all that was necessary. But when you consider that the economy has clearly decelerated, the global economy has also decelerated, and maybe some of the trade clouds are at least clearing to the point where we have a truce or a phase 1, it's possible the Fed eases again, completes the mid-cycle adjustment, and sees how the risk factors they identified, global deceleration, trade conflict, and low inflation, evolve from here. If that's what they say, they don't promise another ease, but nor do they say, oh, we're about to tighten. I think it's possible that the markets take this meeting in stride. If, on the other hand, they say we are done, that could be a challenge for the equity market. That'll be a bit of a surprise relative to rates expectations. People want to hear a Fed that's open-minded and remains proactive to address risks on the growth side.
So what's the new range on the 10-year? Is it going to be 1.5 to 2.5 now?
Well, we've been selectively neutral to long throughout most of this year, so we caught a good bit of the turn in rates. That's been helpful to our relative returns in fixed income at Federated. We felt that we were going to settle into a 1.50 to 2% range. We clearly did. We were sort of pinned to 1.75 for a while. There has been a little bit of a lift recently in yields linked to the clouds somewhat clearing on some of the geopolitical sides of things. I still think we're in a 1.5 to 2% range. One thing to remember, the Fed is debating whether to ease, not to tighten. So the normalization process that began many years ago reached its apex. The risk assets didn't like it. The Fed had to do their adjustment, if you want to call it that. I think the question is now, does the economy truly get some reacceleration, or at best are we just looking for a soft landing? If we're getting just the latter, 150 to 2 seems like a very reasonable range trade as we see the data come in and try to figure out whether or not we're really going to climb the trade challenge in any meaningful way.
So Ed, what happens next year? We get a year-end rally, then January, then there's an election. I mean, is that on your radar? Will you?
Yeah. So I think it's a little bit early for the market to start obsessing about the election, especially since we don't really know who the candidates are going to be on the Democratic side, at least. So
some people say we don't know.
Together, we can make a bigger difference for our communities.
Not yet.
We're a charity and a champion for better giving.
No, but I think so. We've had a horrible year in earnings this year, right? It's pretty flattish. A lot of that is explained by the tough comparison set up by the tax cut last year. But I think if we avoid a recession, as we expect, earnings growth is going to get back on track for like mid-single digits. And if that's the case, then I think we could have another decent year in equities. Probably a lot of volatility, as you would expect, given the politics and the geopolitical risks.
All right, gentlemen. Can you send any wine, RJ? That's not you. That's
no relation. Not in the wine business. In the bond business.
Guess I'd rather have bonds sent to me than wine. All right.
I'd rather drink wine than.
Yeah. All right. We may need some next year. Anyway, thank you, Bob.
When we return, Democratic presidential candidate Bernie Sanders sounding off in the latest CNBC speakeasy. We will show you.
This CNBC program is...
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hurry to TradePoint. The 3 for 2 on all paint offer ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. From Dulux Trade to Leyland Trade. Don't miss 3 for 2 on all paint at TradePoint. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
The Peugeot Professional Van range is the beating heart of businesses across the UK. Whether you're on the road with only your DAB radio for company or navigating tight spots with rear parking sensors, all Peugeot Professional Vans give your business that edge. Visit your local Peugeot dealership during our October van event from the 10th to the 31st of October and drive away with an exclusive finance offer. Master the impossible. Peugeot Motor Company PLC is acting as a credit broker, not a lender. Finance subject to status. Terms and conditions apply. Business users and over 18s only. Guarantee may be required. PSA Finance UK Limited.
NFL fans, hear every live game on TuneIn Premium.
Goes to the right, throws to the end zone, caught by Fells!
15, 10, 5, touchdown Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Tevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Swinging a long drive, left field, he's got one now! Kurt Suzuki gives the Nationals the lead!
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as 2 of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
We are now 371 days away from the next presidential election, and many of the topics on the campaign trail are hitting close to home for corporate American investors. Here's Democratic presidential hopeful Bernie Sanders talking to CNBC's John Harwood about the challenges of power and practices of CEOs.
You can judge a person by the friends they have. You can judge a candidate for president by the enemies they have. And I uniquely, in all due respect to my colleagues, I am taking on the insurance companies, the drug companies, the fossil fuel industry, the military industrial complex, the prison industrial complex, Wall Street.
For more from Senator Sanders, you can go to CNBC.com to see the full interview.
We've got an update on the content wars. Game of Thrones showrunners David Benioff and D.B. Weiss are reportedly no longer working on a Star Wars trilogy. They had been writing and producing 3 new Star Wars movies for Disney's Lucasfilm, but the pair told Deadline that they won't be able to continue the project because of their new $200 million deal with Netflix. Benioff and Weiss also reportedly scrapped an HBO project called Confederate after signing that Netflix deal. Confederate had been a little controversial. It had kicked up a lot of spark. It's an alternative history where they were looking back and assuming that the South
I think the Confederate deal came and went very quick.
Yeah, I think they were happy to get rid of that.
And I think actually the Star Wars piece kind of came and went pretty quick. I don't think they actually got to the point of writing or really developing. I think there was some meetings, some early meetings, and then they did.
It'd be hard to walk away if you'd actually put in work on that.
And they did the Netflix deal. So, but then of course, I mean, I don't know. You guys are more Game of Thrones fans than I ever was. No. There was all then the critique at the end, obviously.
I haven't finished it. It hasn't started well.
Good. Give all the spoilers to them fast.
I'm not the one to spoil it. We got a lot more on Squawk Box coming up. IPO news this morning. We have a new report of a timeline for Saudi Aramco's public offering. We'll bring it to you right after the break. Plus, one of today's biggest losers, Grubhub, will tell you why the stock is getting crushed in early trading. As we head to a break, a look at yesterday's S&P 500 winners and losers.
Executive Edge is...
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, alright. I spy with my little eye something beginning with P.
People.
No, parrot.
I'll have to remember my binoculars next time.
Although you might not be able to see it, your small actions can have a real impact with Shell. Every time you fill up and use Shell Go Plus, you'll be protecting and replanting forests around the world. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Welcome back. You're watching Squawk Box, live from the NASDAQ market site in Times Square.
Good morning. Welcome back to Squawk Box right here on CNBC. Take a look at U.S. equity futures at this hour as we are already in record territory, but the Dow looks like it would open down about 31 points. S&P 500, where the record lies, would open down about 4 points, and the NASDAQ would open about 20 points off. This story is for Joe, I think. Well, it may be for everybody, really, but Joe's the one who's had the problems with his AirPods. But Apple has now introduced a new high-end version of its AirPods, which I think are going to fit Joe's ears better.
It's not a problem with the AirPods, it's a problem with my ears, I think.
Hold the phone for a second. The AirPods Pro will feature a new design and noise cancellation. These are the important components of it. They'll cost $249, so it's a little about $100 more.
That's the important component right there.
They are available to order now, and they ship by October 30th. Here's the deal. The noise cancellation is the big feature. For you...
It's those three little
They come with different size, little rubber tips so they can fit in your ears. They need to create a seal to actually get the noise cancellation feature to work.
So it needs to be a good fit.
So the fit part for you is the issue. It comes in a little, it's more of like a squat little case.
Squat, that's a good word.
It's sort of a wider case, but maybe a little narrower, and that's what they look like. They're a little uglier in some ways, actually.
My solution has been to reverse them, and that works. Someone on Twitter told me to do that.
What do you mean reverse them?
I put my the left one in my right ear and my right, and they stay.
Right.
But if I do it normally, it's very tenuous, and you can have serious AirPod phobia, AirPod fear. Like when you walk in here, that grate is about 30. I don't know how people with heels walk.
You walk around like this all day?
Number one, it's about 30 feet down. It's about 30 feet down.
Trust me, I do it with heels. I understand.
And there was a guy they found who fell in a manhole. They found him like a month later.
Yeah.
But as you're walking across the grate, if that falls out, it's gone for good.
This is going to be an issue with all of them. I want these for a very different reason, which is...
I can't only babies in first class?
No, you.
Sort of.
Noise cancellation.
No.
During breaks?
My problem is that right now I wear these, as you know, all day
during
running
the show.
around.
Yeah.
I wish I was wearing during the show sometimes. Okay. And then when I get on an airplane, I still carry the Bose noise cancelling buds for the airplane.
It is for the babies.
So if I could put these things in on the airplane, that would help.
Comes back to that.
No, if you're a road warrior, we have a lot of road warriors out here who are watching the show every morning. They're in hotel rooms all over the place. They're jumping on airplanes. Who wants to carry 2 sets of headphones?
I don't know. I don't have an answer.
That's the sale.
Okay.
And I don't even know if they're any good, but that would be the sale.
But you're in.
So you don't
I am in.
You have Bose, not Beats. I mean, all the cool people have Beats walking around, going.
Bose are the serious noise canceling.
Are they? But the guys I see it,
If you're serious about it, to be honest. Now, look, Beats is owned by Apple these days, but if you actually care about true noise cancellation, with apologies to the lovely people at Beats, the Bose guys win the game.
Really?
They do.
Because, when they come out at the U.S. Open tennis, every player's got... is it Bose or Beats?
Bose is the one that really work. I have a pair of Bose, too. But those are the serious ones.
Bozo.
Anyway.
For you. Anyway.
There's no way to respond to that.
No, there's not.
It's just high school.
I know.
Yes, there is. Shut up.
Yeah. Shut up is good.
Shut up and read.
Shut up, fatty.
Read.
Grubhub shares.
I love that I don't even have to say it.
Yeah, I'll do it for you. Grubhub shares Grubhub, and we go right to that. Sliding more than 30%. The company reporting disappointing results and gave a weak outlook. Grubhub blames promiscuous diners.
What?
Apparently. Yeah, that's what it says here. Saying more of its customers are now using multiple food delivery apps. Okay, that's totally different.
They're cheating on them.
Yeah, than what I thought. Anyway, delivery is a low-margin business, and restaurants have been pushing back on fees charged by delivery services. I've never used it. I may get some Taco Bell. to my house. But if it's still a half hour away, it's still not going to be.
It's still not going to be warm.
I could go get it.
You can eat it there.
Eat it there.
Yeah, that's the only way you're going to go hot.
BP says its third quarter net profit fell more than 40%, in part due to weaker oil prices. It was $2.3 billion profit. Sounds pretty good, but it was down from $3.8 billion a year ago. Still topped analyst estimates, though.
Still to come this morning, the co-founder and former CEO of Kickstarter joins us to talk entrepreneurship, IPOs, and much more. And later, don't miss our first on CNBC interview with Beyond Meat CEO Ethan Brown after the company's earnings beat expectations yesterday. That stock is still down sharply this morning. Today is the day for the expiration of the lockup. We're going to talk to him about that and much more, company's big plans. Stay tuned. You're watching Squawk Box right here on CNBC.
In 2015, we took a surf trip to Bali, Indonesia.
I tell you what used to be fair, lunch. You used to walk past pubs and just see people laughing and merriment. What happened to those cheery days? I tell you what happened to them. It's been replaced by a pint glass sitting by a computer full of condiments, plastic cutlery, and a pair of chopsticks you use for fishing the noodles out your keyboard. It's just not fair.
At TalkTalk, fairness is important. That's why, unlike some other providers, we offer fixed price plans on our fibre broadband for the entire length of your contract. Search TalkTalk Fibre. Fairer broadband for everyone.
Right now, the future is being written by people like you. Creative thinkers, tech lovers, problem solvers. Are you going to stand by and watch? Well, show the world what you've got. Join others around the UK on an EY degree apprenticeship in digital and technology. And earn a salary working with exciting businesses while studying towards a degree. Don't let the future pass you by. Get involved. For more information and to apply, search EY Digital Apprentice.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Look at that. A riveting quest. A glorious opportunity. A scratch card. Yet he remains unfazed by the challenge. Wavering at nothing.
Miss, please keep it down. We're in the quiet area.
Sorry. Here we are. The moment of truth as he reaches the end of...
Instant excitement with scratch cards from the National Lottery. Amazing starts here. Search Dream Big, Play Small. Rules and procedures apply. Players must be 16 or over.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto renews unless cancelled. Terms apply.
Welcome Back to U.S. equity futures. They're a little weaker this morning after the S&P hit a new all-time high yesterday. We're giving back a little on the Dow, 34 points. S&P down about 5. NASDAQ indicated off 20. Take a quick look at crude. Crude hasn't been the most exciting thing to watch. It's been in a range between 50 and 60. No one's complaining, though, as I saw in the Lundberg survey. We're down in the mid-twos, $2.50 a gallon for gas.
Below where we were a year ago.
Yeah, below where we were, and that's always good. Breaking overnight, Wall Street Journal reporting that Marathon Petroleum is preparing to spin off its gas station chain. It's considering shaking up its executive leadership to appease some key shareholders, including Elliott Management, famous for some other activist situations. This one, though, is fluid. It's about oil. According to the report, as the company prepares to release earnings in 2 days, it may still end up reversing course on some or all the major moves.
Also new this morning, Saudi Aramco is reportedly aiming to set the price range for its hotly anticipated IPO on November 17th. That's the day this all is supposed to go down, with a final price announced December 4th. It will begin trading in Riyadh on December 11th. That's according to the kingdom's state-owned TV service. Aramco has delayed the deal earlier this month to give advisors time to secure cornerstone investors. Of course, this whole thing has been delayed multiple times. However, I don't think we've ever gotten to the point where they've actually released dates in this way by the Saudi government. So we say it's hotly anticipated. We should say it may not be as hotly anticipated as MBS wants it to be, given that the price and valuation have come down.
Throw a party and nobody shows up.
We will see. We will see. There is a view that they're trying to not have a very low price, but obviously to set a price
that's enticing,
so that hopefully it goes up, because that's where the real money in this is going to be later.
Down the road.
Right.
In other IPO news, the company behind TikTok is denying that it's looking to go public. A spokesman for ByteDance spoke to multiple media outlets disputing a Financial Times report that said it was weighing an offer in Hong Kong as early as the first quarter of next year. Should tell you that even though TikTok, we always say, is a Chinese site, and that's true, KKR, General Atlantic, and a whole number of Sequoia, I think, and a number of U.S. venture firms have stakes in that company.
Speaking of IPOs, our next guest started and ran a company that has decided to stay private. Yancey Strickler is the co-founder and former CEO of crowdsourcing pioneer Kickstarter. He's also the author of a new book. It's out today. It's called This Could Be Our Future, a manifesto for a more generous world. Yancey, thanks for being here today.
Yeah, thanks so much.
Before we dive into the book, I want to get a little bit of the backstory for people who may not be as familiar with it. You are somebody who has kind of preached this and lived this for years about not maximizing profit, not taking every dime that you could possibly get. Explain that ethos. Explain why you believe that.
Well, Kickstarter, the company I co-founded, we became a public benefit corporation in 2015, which requires us to legally balance producing a benefit for shareholders with also producing a positive benefit for society. And that just came very naturally to us, and also is part of why people love Kickstarter. And it's a platform that appeals to creative people, to artists. They want to know that they're using a platform that's not using them to cash in and exit, the scene or something like that. So we've always had a strong belief that the long-term success of the company relies in a strong tie to our community, a strong tie to these larger values. And I think that's something that's needed elsewhere and is already happening elsewhere.
Kickstarter, just for those who aren't even familiar with that, you find a way to get some seed money for artists or people who are looking to do a creative project, something like that.
Kickstarter, someone posts an idea, something they want to make, the public puts up the money to fund it. There's no financial upside, you're just getting a copy of whatever's getting made. But successful Kickstarter projects include Peloton, which just went public a couple weeks ago, Oculus Rift, hundreds of restaurants, things
So we had this conversation actually multiple years ago. Because I don't know if you remember this. To me, I always said Kickstarter felt like one of the greatest philanthropic ideas around. But I never thought of it as a true investment, because if I had put money up for a Peloton, I might have gotten a bike out of it. Right. But I'm not getting what John Foley and all of the other investors are getting.
Yeah, exactly. Because when Peloton's putting its project on Kickstarter, it raised a couple $100,000, but it was an early idea. It was quite a speculative thing, and so it wasn't maybe a great business case at that moment. It was just more, here's a couple entrepreneurs, we have this vision, we think that there's public interest, can we capitalize on it? And so we're a way, Kickstarter is a way that people can interact directly with the public and build that community. But yeah, there's no financial upside. The upside is more a communal upside. It's, look at this restaurant, my name's on the door.
What's the story on the union situation?
On the Kickstarter union situation?
Clear up that it looks like a talk the talk but don't walk the walk. Why push back on unionization?
Yeah, I haven't been involved in the company in the last 2 years.
Right, but what do you think's going on? Because it doesn't look good.
It doesn't.
It looks totally hypocritical.
Yeah, I mean, what I would hope would happen is there would be a vote. I think that employees should vote.
The current management. Why do you think current management?
Well, they've just been saying that they want the employees to have a vote, and if the employees want to have a union, it will happen, and if not, it wouldn't happen. And I think the idea is just to put it to the employees to make that decision. But I'm not clear on why that hasn't happened or what it takes for that to happen. But as a co-founder, owner of the company, I'd love for them to vote today and just move on one way or the other.
Is there anything to, if I were to push back, and I look at some of the things in your book, that a lot of the ills of society you tie to the profit incentive, and I don't know how you look at it in a vacuum. I mean, we've tried other things, and it may not be perfect, but it's the best society has ever figured out, the profit incentive. Yeah. And it just seems like if a company is profitable, employees keep their jobs, the employees keep paying taxes to fund education and all the social needs we need. If someone becomes wealthy by being an entrepreneur, he becomes a philanthropist. It just seems like the converse. I don't think you put forward that, wow, it's really better if you don't make any money. And if the company is unsuccessful and actually loses money, you're really doing well, because that seems like the converse of what you're saying. I guess it's not.
Yeah, I don't disagree at all with what you're saying, and I feel like the focus on growing the capital base has made sense to this point in history, but I feel like we might be coming to a point where it's time to change streams.
And actually try to make less profits and be less profitable,
I think it's try to grow value in multiple ways and not just one.
But isn't profit the engine to be able to do all these things that you want to do for society, either through taxes or philanthropy?
Possibly, but I think that there are limits to these things, and taxes is interesting because the tax rates keep going down, so the ability for the taxes to be used to redistribute some of that income is not really happening to the degree it happened before.
We want to redistribute opportunity. Do we want to just purely redistribute income?
No, I think opportunity is the ideal. Okay. I mean, I think an equal opportunity society is what we should work towards. But what I imagine is that financial value is the first rational value we've learned to define, we've learned to trade, we've learned to it's all on the same dashboards, but I don't think that's the last one. And to me, the next evolutionary step for society is figuring out what are those next values. So something like the climate crisis, I think, puts that right at the forefront of our mind, right? Because the fact that if we're trying to change that, to change the amount of carbon in the atmosphere, we all need to be working on a similar language. Right.
Yeah. Is there a historical precedent for making this model and that you can point to where it's been more successful than what we do now?
Yeah, I would say Panasonic. I mean, Panasonic
a place where we've become less, less capitalistic, more socialistic. Has it been done right anywhere in the past where you've had a good outcome?
Yeah, sure. I mean, I think if you look at something like Europe, where you have a capitalist society that's also balanced with a strong social safety net, you have a mix of saying we're not asking for money to be the solution to everything because the conversion fees on that are high, but you're providing other services in other ways. I mean, I think that's a smart way to think about things.
I don't know. We can choose, and it is an alternative, but in the last 40 years, I mean, the people are probably 40-50% less wealthy in Europe than here because of GDP growing at 40% less.
I think we saw an interesting conflict a few weeks ago with the MBA in China, right, where the idea that economic expansion would be would cure all ills, and then we ran into this clash of, well, what happens when economic value runs into values of free speech? And it was like a record scratch moment because we hadn't thought about that in a while.
All the people that are supposedly woke were the most unwoke about what really was important, right? Are you saying that they should have taken a stronger stand for human rights in China?
I'm glad that Daryl Morey tweeted what he did.
You are then?
Yeah,
okay.
Yeah, of course.
But I think that previously we thought that this is the most woke league, the most tolerant league. Adam Silver is doing.
But I just think here we're running into a new kind.
Right. Once it ran counter to what you're trying to push back on, then really the rubber met the road, and we saw what they're really interested in. And
yeah, well, it's a new kind of friction. It's like the first moment we're feeling that. Those first pangs, I don't think you get the full response. You're just sort of figuring out this new normal.
What would the response be? in your world?
In my
You're
world?
writing the book for what the NBA was supposed to do.
Well, I think that the NBA would probably do what Adam Silver ended up saying, which is like, we can't police this. We're a league that operates according to free speech. You kind of have to take it or lose it, take it or leave it, and then China makes that call, which I think is the line they're trying to hold while not pissing anyone off. But if I think about the need for, say, American companies to, say, promote American values in China, let's say that becomes a new concern, just as it was in the Cold War, where American companies were promoting freedom and the idea that, you wouldn't do certain things in markets because that wasn't in the American interest. I think that we're going to have that idea come back again. Because to me, if I look at the 1950s and 60s, the golden age of capitalism, what was happening then is that capitalism was competing with communism. It was forced to prove its merits. Like the scoreboard was which system can produce the biggest middle class, can help the most people get to a place of financial sustainability. And it was incredibly performative in those moments. And now there is no real competition for capitalism. We've been in this period of peacetime.
What do you make of the argument by our Treasury Secretary, Steve Schwartzman, others who've looked at, for example, what the Business Roundtable has announced and said, you know what, I wouldn't sign that.
Yeah.
And the reason they often argue they wouldn't sign it isn't because they don't think that businesses aren't already doing these things, which they would argue they are.
Yeah.
And you could dispute that if you want, but they would say, look, it's too hard to serve so many masters.
Yeah.
If you give me one target, I can do that, and I probably have to do all these other things to get there.
Yeah.
But if you give me 5, I don't know how to value or judge what I'm doing.
Yeah. I think that's probably true. I think maybe 5's too much. It might be 2 or 3. It might be there's 10 that we're collectively working towards, but it's not everybody's job to work on every single thing. So I feel like the notion of an expansion of responsibility for businesses, I mean, it's already happening. Customers are demanding it. Employees are demanding it. Smart companies know that that's how you lead in a market, is by being the first to sort of stake out that ground. And I think it's just going to keep happening.
Yancey, you've walked the walk for a long time with this. Back in 2015, when you walked away, or when you said that the company would not go public, would never go public, people were looking at a $520+ billion valuation on the company. But walking away from that and now watching what's happening at Kickstarter, is there a time that company will ever go public, you think?
It's hard for me to imagine. I mean, the mindset about not going public, all those things, it's just like we really want the service to be what it needs to be for that community. So it's just trying to think about those lines, what best serves this product, this platform existing for the long term. Mm-hmm. So I don't think that's the best way to do that. But, I think it's less dogmatic than it is just serving the mission is what matters. Like a place like Kickstarter is important, a place where someone like the Peloton founders can put an idea and just have a shot. It's so wide open, and that space needs to be preserved. So that's the responsibility.
Yeah, Yancey, thank you for coming in today. We really appreciate it.
Good luck with the book.
Good luck with the book.
Thank you.
We should tell you Merck earnings are out right now. Looks like the company came in with earnings of $1.51 a share. That is well above what the street had been expecting of $1.24. Revenue was also above Wall Street's estimates, and then the company is raising its guidance for the full year, in large part because of the beat that they just had. They're now looking for earnings for the full year to be somewhere between $5.12 and $5.17 a share on an adjusted basis. The street was at $4.92, but if you consider, let's see, the 27 cents they just beat by, that would put them all the way up at $5.19. So it's really just acknowledging the big beat that they saw this time around.
So the Dow has pared some of its losses on that number, and then Pfizer also reported, in the Pfizer stock is indicated up about 4% on the latest report here. I'm torn because the profits are good, and now I don't know how to feel about that.
Too good?
I hope. I don't know where to draw the line, to be honest with you, when these profits are actually too high and become a detriment to society. But 75 cents a share was above the estimate of 62 cents. Unfortunately, I believe revenue is also pretty good. Daggone it. Let's see. The revenue at this point, they're breaking it out. 7.6. Is that the net? That's the actual net profit. Actually, $7.68 billion. I don't have it in the profit right now. Let me just make. We've got all the different. We got Upjohn revenue. We're breaking it all out. There it is. 12.7 versus 12.26. So that is also above. And then we also have had seen adjusted earnings per share of 276 to 286 for the year, and 282 is where the street is. And they have now raised that to $2.94 to $3. Now indicated $2.94 to $3. Couldn't they use some of these profits maybe to cure some horrible illnesses, Andrew? Isn't that possible? You could plow it back into research and development and things like that.
Right, you could spend it on advertising.
Yeah, I mean, right? I mean, probably better if they're up, right? Good.
What do you think?
I don't want people gouging and drug prices, but I also don't want the European model where it's capped and they have no innovation anymore. All these things, when you look at them in a vacuum,
balance, my friend.
It is, but it's also,
you got to figure out the balance.
Virtue signaling is great in principle, but it just doesn't work in the real world a lot of times, and it's we just need to keep our heads on straight here before if we got 70% of the millennials ready to elect a socialist, then we've done something wrong in the last 10 years. Okay.
Continued. Coming up when we return, we will continue that debate. Dow Components, Merck, and Pfizer just out. Much more on those moves after the break. Plus, we'll dig through Google's report. We'll be right back.
At Synchrony, we're changing what's possible every single day. But what does changing what's possible mean anyway? Well, if you run a business, it means a lot. For starters, we provide you with financing options for your customers. That way, you can help them buy the things they love instantly and pay over time. And that turns them into serious fans. Hang on, there's more. Want customer insights? We've got those too. We use data to show you what your shoppers have already bought, so we can tell you what they might consider buying next. And you can offer them the perfect products. That CEO gets it. From adding unique capabilities to your company's apps to bringing you loyalty programs, our technology and financial solutions are changing what's possible in all sorts of ways. So, how can we change what's possible for you?
Growing a business is tough. Sometimes you have to think outside the box. Today's consumer expects quality and convenience. If your product requires assembly or delivery, Tackle has a network of over 70,000 providers who can make your company more productive. Tackle can even help with same-day service. The Tackle app uses state-of-the-art technology to connect you with skilled people who can help with all kinds of small jobs. Visit tackle.com/partnerships to see how Tackle can help your company grow.
It's a madhouse. They buy things, and I'm wondering, where did this even come from?
There's no way to keep spending under control.
Or to keep track of what everyone's up to.
When I'm not there, they all raid the piggy bank.
I'm not even 100% sure.
For how we stay afloat.
But on the upside, I never have any of these problems at work.
With Coupa, the cloud-based business spend management platform, you get visibility and control of all your company's spend in one place, so you can leave the chaos at home. Coupa.